Hi, I'm Madanagopal. I manage Sundaram Large and Mid Cap Fund. See, the core philosophy of the fund is going to be GARP, which is growth at reasonable price. Now, to the question, why growth? India is in a structural growth story with a 10 to 11% sort of a nominal GDP growth rate, and you are going to get companies which are growing at 15-20%, and companies which are gaining market share probably growing even above 20-25%. So that makes a case for a growth oriented portfolio for you. A typical large cap is going to be a 60-70 stock portfolio, and another mid cap portfolio to your overall allocation will add another 100 stocks. So overall, you are going to invest, if you are investing in a separate large cap plus a mid cap portfolio, around 170 stocks. That's fairly large diversified holding. What we are doing in our large and mid cap portfolio is we are going to give you a concentrated high conviction portfolio of around 40-45 stocks. We are going to have around 40-45 stocks compared to 70-80 stocks typically the peers have. The overlap is going to be very small in this portfolio because we are generally going to avoid the slow growth large cap ideas. And within mid caps also, we are going to invest into a part of the mid cap which is growing fast and representing the India growth story, and also the small cap allocation, which will make all the difference. So the portfolio will add diversification to your existing portfolio, and it will have very low overlap with the existing large peers in the segment. So from a sectoral allocation point of view, the focus will be on growth cyclicals rather than investing into defensives. We will invest into sectors which are likely to grow in the next decade. These will be sectors which are contributing to India's growth story and play a predominant role in driving the growth from here. So within consumption, what we are more interested is consumer discretionary, urban consumption rather than the FMCG. Within lending, more than private banks or large banks, we are more interested into NBFCs or fintechs which are gaining market share. And within e-commerce space, we will invest more into e-commerce space which are gaining market share at the expense of traditional retail sectors. And overall, a segment where a lot of focus will remain in this portfolio is the manufacturing story. So given this, manufacturing will be a focus area. And within manufacturing, we will be interested in investing into Make in India programs in electronic space. We will be interested in pharma, CDMO space. We will also be interested in heavy engineering and auto export stories. First is we look for companies which are consistently expanding their TAMs. The addressable market expansion is a very key attribute when you are evaluating a structural growth story within the ideas that you have. So that is the first one. Second is founder. So we like to be working with promoters who are focused on growth and showing exceptional attributes related to execution of their growth plans. Third is the margins and market share. The portfolio always likes to invest into companies which are gaining market share. Fourth is margin expansion. There should be either an operating leverage playing out or a gross margin playing out. Most importantly, we look for operating leverage playing out. And the fifth attribute is the valuation. Most of these companies don't trade cheap, but we try to keep it in such a way that we don't overpay for these companies. But broadly, we will play both businesses which are having a strong moat as well as businesses which are benefiting from the cyclical growth that is happening in that particular sector. The market has seen a decent correction in the last one month or so, but actually market valuations have been coming down for the last 2 years. There has been earnings growth concerns in the large cap, but broadly some of the sectors that we have been investing into have seen decent amount of earnings growth despite overall growth that we are seeing. So if you look at market valuations, the bond yield and the equity yield have come much closer. So these are pretty good periods where you can invest from a long-term perspective. And if you look at from an earnings growth perspective, when the valuations are not too steep, and even if you don't assume the valuation to go up, growth of earnings itself can translate into that amount of returns for the investors. Why large and mid cap fund? Primarily because This is going to give a much more concentrated approach towards playing the specific segments of growth areas in large as well as in mid and some part of the small cap segments, rather than investing separately on a large cap fund and separately a mid cap fund. So what you need right now is an selective stocks within large cap and selective stocks within mid cap, and slightly more oriented towards large and mid cap. That's what we will offer in the portfolio that has an alpha generation potential for you. Idea behind this portfolio is invest into growth segments of large cap, mid cap, and some part of allocation to small cap as well. Sundaram Large Mid Cap Fund will give you a right allocation by investing into the growth segments of large cap and mid cap. So invest in growth segments of large and mid cap, invest in Sundaram Large and Mid Cap Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.